Welcome back. Disney kicking off Investor Day just moments ago. The company expected to lay out its strategy for its upcoming slate of movies, among other things. The stock has been on a tear. It's rallied 27% since just the beginning of November after beating fourth quarter expectations and reporting nearly 74 million subscribers on Disney+. Let's bring in New York Times columnist, CNBC contributor Jim Stewart, wrote the book on Disney. Jim, obviously the stock is at a record high, so investors are pleased, but also hopeful for the streaming product. What do you think that the executives need to communicate today around that?
Well, I think there would be some really key points coming out today. I'm really interested to see what they reveal. Certainly, we're going to want the update on the number of subscribers, which has gone incredibly well. I mean, I think that looking back not just the last few weeks, but the year, Disney has pulled off the pivot to streaming, and that was a huge gamble. Investors were very worried. It's been a big success, and the stock has reflected that. Secondly, is going to be, what is their distribution model going to be? You know, AT&T Warner shocked everyone recently by saying they're abandoning the theatrical release window and they're going straight to their streaming service. Nobody thinks Disney is going to do that or needs to do that. But that has certainly put a spotlight on the incredibly intriguing question is, in this new world, how do you maximize revenue from that content? And I think those will be...
and Disney has...
Yeah, go ahead.
Oh, sorry, I didn't mean to cut you off. I was just going to add that Disney has experimented with this a little bit during the pandemic with Mulan.
Right.
What do you think of Warner Media, since it's Warner Media's decision? They're getting a ton of blowback from Hollywood and talent. Obviously, they're going to get... Their paydays aren't going to be as big, but that could be a serious issue.
Well, you know, there has been, you know, kind of this underlying buzz about Warner that these AT&T people don't really know how to run an entertainment company. And the way this was rolled out and the blowback from it is kind of reinforcing a lot of those ideas that even if they were going to do this, they didn't do the hand-holding in the creative community. They didn't get the word out in a way that would have minimized this. I do think, you know, Disney has said they're going to say a little more about Mulan, and they're, you know, they were charging a $30 premium to get that directly on streaming, and that's a totally fascinating new model here, because when you think about it, isn't it strange that all movies, when you went to the theater, cost the same, and whether it was a super high demand blockbuster or a very narrowly targeted art film, you know, you paid one price. They are really in a position now to test different pricing models to see how they can maximize revenue using this combination of theatrical release and direct to streaming, and then free streaming or charging a premium. And I have to hand it, you know, Disney pioneered this very sophisticated pricing model on Broadway. They do know a lot about pricing of entertainment products, and it will be fascinating to see what they say about Mulan and how they intend to address this issue going forward.
I don't think we've got to the Mulan part of the presentation yet, but Bob Chapek did just reveal, Jim, that Disney Plus now has 86.8 million subscribers during his presentation. But Jim, to your point about pricing and how that could change, clearly Warner Brothers has managed to annoy certain members of their talent pool more than Disney has or Universal has. That said, is now not the time to experiment, to try something new? It's not like they're making any money in the box office the regular way, charging people the same price for all the tickets. So I mean, are you not surprised that everyone's gone quite so annoyed about this? This year is the year to try something new.
Well, no, this is a great time to try something new, and in any event. But the pandemic is going to end, and people are going to go back to theaters. And if you look at Disney's earnings, you know, before the pandemic, they were, even this past year, they made $2.5 billion in earnings on their theatrical distribution, which is a pretty impressive number. Warner is giving that up. Warner is in a much weaker position. Look at those subscriber numbers. Disney has firmly established itself as one of the surviving streaming operations. It's not clear yet that the HBO Max has achieved that, and they're using this, I think, as a lure to get people to join. I mean, Disney is stronger. It's not going to have to do that, given that it already has 86 million subscribers. Now, will it get to the Netflix level of almost 200 million globally? That's still a big question, but maybe they can.
Disney is moving higher by 2.25% after hours, after that number, 86.8 million Disney Plus subscribers. Jim Stewart, great to see you as always. Thanks for joining us.
Yeah, nice to see you. Thanks.
Shepard Smith here. Thanks for watching CNBC on YouTube.